Hey everyone, John and Ray here, Slingshot Futures Trading Group, SSFTG. Today we're going to be taking a look at something a little bit different, and it was at a request by one of the members talking about how cool it would be to do a day-by-day or a week-by-week type mentality like we do the 5-minute candle-by-candle psychology. But instead, taking that same mentality and dragging it out to a much, much larger time frame. So I thought, man, that is a really cool idea. I love the idea, so let's roll with it. So let's look from the beginning of 2021 in January, and I'm looking at the stock AAPL. I'm sure you would never guess what name that is. So obviously we've got a fairly interesting one, but if we look back at what's been going on so far up to this point, let's look back at the last year. Right, the last year was over here. They had a base that was put in around the $53 mark in a rally all the way up to $138. Very, very strong increase in price from the bottom to top. Basically, I mean, what would be the percentage of that? Let's see here. 160%, yeah. So really, really big, monstrous rotation to the upside. And they pulled back a little bit. So when the market's pulling back, we've got to ask ourselves, well, where are they pulling back to? Who's showing up as support, etc.? And we can see that, well, after a small little pullback, and I say small, it went from the top at 138 all the way down to 102. It's not necessarily small per se, but you know, a good 30% pullback or so off the top. Buyers show up with some really strong strength. Bears try to go, they fail, and we roll back up to the top. So we're kind of at the current context now. We know that the bulls are in control, and they're trying to drive the market up to where? Up through the highs. Well, if we look at the completion of the first week of January, we just poked our heads above it, and now we're closing all the way back down. That's not a great sign. Realistically, that's not going to help very many people, and a lot of buyers, that might make them kind of nervous. Like, wait a minute, what? Like, okay, I'm not a big fan of that. Show me more. What can you do? Right? And when they're asked to show more, well, we get a pretty bad response from the bears and a relatively decent response from the bulls. So now, you know, okay, we just cycled off the highs. Maybe we're consolidating a little bit. The market's still demonstrating some really, really strong support off the previous launch pad, especially if you go backward a little bit and look at where that last pullback was. It was nothing more than just a re-entry on that first attempt. But either way, the longs are very obviously in this and they're looking for upside objectives. And if that's their entry point, from that point on up to the highs, we are sitting on top of a 2-to-1 as well, something to be noted. And the market is now starting to close underneath it. That's a bit of a concern, right? Like, oh man, does it really have to close underneath it? That's going to make things a little bit more difficult. Now, from the bulls' perspective, they want to see this not go very far, right? Go back up, show some support. The last bull bar, in fact, given the fact that we haven't broken a previous bull bar's low, that bull bar's low, this bull bar, that one, none of them have been broken. So a nice little break underneath that previous low would be good, and then maybe bulls want to re-up again. But for right now, the second week going into January, we're kind of flat. There's not really a whole lot going on. A little bit of a pullback, maybe buyers buying into it. Inside sideways consolidation, the market not proving a whole lot. Maybe the potential for them to stare off the cliff and break to the downside. Could also be a little bit of an inside consolidation for a pennant. And given the upward momentum that we've got going on right now, it would make more sense that that pennant would break up. We are holding underneath that 2-to-1 objective, which is the concern. Right, that 2-to-1 target holding underneath. The buyers have to get back above this if they're going to hold it. Otherwise, we've got some issues. And the likely objective for bulls right now is back up to the highs, 138. That's all they were able to make before. Not likely going to get much further yet. Very strong pulse to the upside going into the end of January. And closing back above that 138.01. Beautiful attempt from the bulls to try to get this job done. And really strong emphasis that, you know, we've got a chance. The bulls have a real strong chance to get this thing going now to the next objective, which would be a 3-to-1. Now, as far as the 3-to-1, it's not too much further away, but the 142.32s or so would be the 3-to-1 objective. And that's going to be where a lot of traders are going to be looking to, you know, kind of push off and get to the next target and keep this train going. Really nice bull bars, though. Oh, jeez. He says as the next candle is a twin reversal down. Now, notice it did gap and open above the 3-to-1 target. And given the response was so aggressively bearish, I have to assume that those traders took profit, so much so that we've now got buyers on the back foot. They're like, oh, crap. we might have made a little bit of a mistake here. Please come back. Right, we've got the new all-time highs a little bit further up here, and the new highs up here at 145s, and this twin reversal off of the top is incredibly dangerous if the bulls can't show back up to the party. Inside bull bar, maybe they can get things going, right? Look at the overall structure of things. Nice, tight move to the upside. It's staying consolidated. As long as the bulls can trigger above that bull bar and get things going, we should be okay. But the upside objective, we're still probably going to find some resistance in the 142s, with the earlier traders realizing, crap, that was my 3-to-1 and I missed it. I should get out. Right? So they start jumping ship ahead of it, and that means that we've got some resistance overhead. We do get the next trigger, and they do get the bulls in, but it immediately fails back down, and that's a really bad sign. Anytime you have a trade that immediately fails, the next thing that traders usually are going to do is ratchet their stops underneath that because they want to mitigate risk. That does decrease the probability of success if the longs are going to stay in this trade, but that does mean that the bears may have an edge for a deeper pullback. I mean, realistically, if they're going to pull back a little bit deeper, it's more likely going to be just back to the previous structure in round about the 110s to 120s. That's kind of the hot spot from where the earlier buyers picked it off at. Bear bar closing underneath the cycle. We now have the 3-to-1 traders who have not been given a chance to re-exit out of that, and we're starting to push down. Nice bear close going into the middle of February, kind of the later part of February, and now we're seeing bears pressing back down. This area is going to be a really nice area of support. You can see the shelf that they've built here. The problem is if this shelf breaks, there's not really much else until back down here in the 15s to 20s again, like we were talking about. So this is the area where if they're going to pull back and hold, they got to get things going, and it's looking kind of shady overhead with the with that 3-to-1 target rejecting so aggressively. Let's see. Oh no! Okay, big spike right through the area that was supposed to be support, which means that they're probably going to dive down into the 115s. I would like to see the lower end where the earlier buyers defended their entries in the 112s, 113s, but again, that might not be feasible. That would be a really, really strong point of interest if they get a bounce off of it. That would be the nice spot. Right now, bears likely getting more continuation to the downside, breaking through support and downward candle gapping, suggesting that going into the end of February and the beginning of March, we should probably see a little bit more maybe downside momentum. Not necessarily. The candle gap targets are already filled. So even though this looks like it's incredibly bearish, realistically, it doesn't necessarily have to go too much further. And we already know that there's support underneath us, which really favors that aspect. Really sideways bear bar, not really figuring out what it wants to do. It did make a slight new low, I guess. Getting a little bit closer to that zone of interest, but not quite there yet. A little bit of back and forth, a lot of confusion. This could just be buyers who were trying to buy, getting out. And the fact that it closed back underneath it still maintains that the sellers have control, but the downside candle gaps being already completed doesn't really bode well for a lot of continuation. Okay, nice little dip down into the upper portion of that support zone, and a lot of good support coming off of that area as well. This is also, to be noted, a zone of interest. If the bears were trying to sell this previous major bear bar, and they didn't get their chance to get out at break even over here, they are now being given a chance to get out at break even, on top of all of the other support that's going on. There's a lot of reasons why these bulls, even though it's a doji, may start coming in here. It's very early, and at the very least, it'd be much more beneficial to see them break above some of this falling resistance, get it out of the way a little bit as we go in towards the middle of March. We do have a nice bear rejection off of that falling resistance, which again isn't a surprise. That's the thing that's in the way. That doesn't mean immediately sell, right? This market is still bullish. It's still going higher. But we've got to be cognizant of the fact that, well, we rotated off the highs, the 3-to-1 targets hit. If they are going to go lower, they're probably going to go back for a break-even test towards the lower portion. That would be the logical point of interest for them to drive down to. They don't even follow through at all. Now we've got the possibility of a monstrous bear trap. And noting where this is all on top of that candle gap completion, right? We're all on top of that candle gap completion. So bulls, they're starting to look at this like, well, wait a minute. The bears just tried to short this falling resistance, and now they have a bull response. Not the best bull bar in the world, I'll give them that, but it is still potentially a trap. They've got a shot. Maybe we get a rotation to the upside. We know the previous resistance, well, it was support, now it's resistance. They've got to get through this. But, you know, it's looking okay. Now that makes it look a lot better. We've got another move to the upside, but what makes it look so much better here is the fact that if these shorts were trapped, they were given a chance to get out of break even. That changes everything, right? That shifts this whole thing. Way, way big difference now. All of those shorts being allowed out at break even, we're shifting and transitioning above this falling resistance. This is what we needed to see. So if buyers are going to be coming in, they know, even though it might not be as good of an entry as down here, they can still realistically get in with a favorable, more likely scalp from this perspective back to the upside, and that would put targets up in the 135s. Whoa! Okay. Jeez, oh Pete's. Jumbotron bull bar all the way back up. Now remember the context here. These traders know that they can't really be 2-to-1s. It doesn't fit here, not unless they were buying down on this dip. So it's more likely that we've got scalp objectives that are still kind of looming, and we also have those earlier 3-to-1 traders who weren't given another chance to get out. We've got some concerns on this rally higher. Scalpers, I still think, make more sense. We've got weakening bull continuation, but big caveat here, we do have some monstrous candle gapping now setting up, allowing for potential wider targets to the upside here, going from the bottom to the base. That would give upside objectives into the highs. What do you know it? Right back to the 3-to-1 target at 142. You can't make this stuff up, right? Now, we are pushing into the scalper's objective, and a lot of times the scalper's objective does find some resistance, especially if that's the only thing that made sense to do, which is the case right now. A little bit of a concern as we push into these 135s, but if they can clear this, that will likely be the next launching pad for the continuation to the upside. That's not great. They tap it and they hold off. We do still have the open candle gapping objectives to the upside, but there's some pretty definitive resistance coming in here. Traders rejecting off of the scalper's target to the tick and pushing off. That's a tough one. Okay, let's see. Okay, so this is that usual response that you get at a 1/2-to-1 scalper's objective. If the bulls are going to maintain their support, they're likely going to maintain their support around their originating entry point. Right? That's going to be the likely zone of interest that they try to defend for the higher low, and then they get it to rotate on up through the highs. We know that the scalpers have already been satisfied in that notion, and if we're looking at it from a swing trader's perspective, now we can narrow this in and say, well, they shouldn't break that low then, which means that I can fit a 2-to-1 inside the highs now. Perfect. That's what we wanted to see. So a lot of traders are going to be looking for this pullback to kind of anti-fill in this gap a little bit and try to pulse down in to allow swing traders a way in that still fits inside those 3-to-1s. It's perfect. Getting a little bit closer, you can see buyers are antsy. We're also backfilling some of this gap. So this gap now narrows in. And if we measure this gap, that means that this is now an inside closed gap. It's already done, right? It's inside the top. It's going to make it a little bit harder as far as that to be an objective. So I'll erase that now. It's not going to help us. There we go. So this is what we want to see. Bulls finding supportive bouncing going into kind of middle of May. We're getting a nice bounce off this 124, 125 zone. Very obvious rejection point. There is some slight candle gapping to the downside. We got to give them the benefit of the doubt, but obviously that's basically been filled in. If they do go lower, it's not likely going to go much lower, and it's very obvious that bulls are buying into this move, looking for a secondary pulse back to the upside to finish the job. And these are swing traders now, noting that they have that ability to get in. There will be a lot of traders who are waiting for a little bit of extra proof. This bounce off of this looks absolutely incredible, but that may not be enough. So let's see if they give a little more if they just want to jump ship. Okay, more support inside bear bar, but holding still above that entry point, looking really good. Big, strong bear bar. Uh-oh, right on top of that entry point. Is this going to be where they spark things to the downside? Oh, baby, baby, baby. What a spot to get a trap. The sellers try getting to go underneath that break-even point just to get suckered in to give all of their shares right on over to Goldman and JP, and they ate it up like it was going out of style. This is a potential monstrous launching pad. This might be the launch up to the 3-to-1 or the 2-to-1 rather, that we're looking for, but we could also see this be a continuation above those 145s. This is the kind of trap that gets that stuff done. Let's see how they follow through. A little more bullishness, and even better, these sellers haven't been given a chance to get out yet, right? They've been juked. They are not out, which means that they are stuck. Perfect. That's what we need to see. Oh, even more squeezing. There they go. They're starting to get nervous. Sellers maybe re-upping to try to defend off the bear bar on the top. If they can close above this, it's game over. Beautiful bullish continuation. Those sellers now realize that they're stuck. Let's see if they get out at break even. Nope, now they're getting squeezed. Everybody's getting stopped out. Upside objectives will start hitting in the 141s. But again, realistically, we could be reaching out to a larger target above those 145s or maybe even further. Yeah, look, it just clears straight through the 2-to-1. The next objective is going to be a 3-to-1. So if we're looking for the next objective higher, we've got it up at the 150. Perfect psychological location for a target to be placed out. Jeez, oh Pete. Jumps up, hits it almost exactly, right up to 150 to the tick. Psychological level taking place. Beautiful blow off above the highs. We're closing above the highs. Really strong continuation. The market gaps down, snaps back up. They haven't technically filled that 3-to-1. Do they get the job done? They're stalling. Little pennant formation now. Ooh, remember, the bears are still stuck. Oh, man, they're getting whipped around a little bit. Big bear whip, inside bull. Big bull, and then there they go. Squeeze target back above the highs. And I believe this is right where we are now, right? Yeah, so this is going into September. Upside objectives then, going further, are going to be 5-to-1s. That puts upside targets on Apple at 167.56. And man, that would be a heck of a rally. So a really interesting way to kind of divulge the same psychological perspective, but in a different tone on a weekly chart on Apple. And you'll notice it's the same thing. That's because a market is a market is a market. People are controlling them, whether they programmed an algo to do it for them or not. It's still people behind the scenes, and this is a really, really great example of exactly that. I hope this one found it useful. It was a great request. I really like this idea, and I may run with this a couple more times here. But really good example of just how you can use this on everything. It doesn't really matter. As always, if you have any questions, drop them in the comments below, or if you have a more detailed question, you can always shoot me an email as well, jhb@ssftg.com. Until the next one, enjoy, rest up, and we will see you all then. Thanks.